if they wrote legislation back in 2018, the stablecoin industry has already just blown past what the expectation was in 2018. So it's hard to do. I mean, in my opinion, maybe keep it somewhat specific to the industry, but try to keep it on a high level and keep that open line of communication with the industry.
Hello and welcome to Public Key. I'm Eitan Danon. In this episode, Director of Regulation and Compliance at Chainalysis, Caitlin Barnett, sits down with crypto compliance exec at Agora, Bill Plumeri, who explains how stablecoins and crypto compliance tech have advanced since 2017. Bill identifies the impact of blockchain forensics and the significance of automation in today's compliance, while highlighting the financial crime concerns amidst different market bull runs and the importance of ecosystem monitoring against the backdrop of regulation like MICA. Bill dives into the role of stablecoins in modern finance. He explains Agora's efforts to leverage stablecoins using high-throughput, low-cost blockchain solutions to address long-standing payment and infrastructure challenges, especially in emerging markets like Africa. The episode is a must-listen for those keen on understanding the intersection of compliance and stablecoin infrastructure. Did you miss out on our flagship event, Links, which took place in the heart of New York City? Don't stress. Chainalysis provides you exclusive access to the free Links virtual event. You'll learn about crypto policy trends, including the latest data-informed insights on U.S. policy and their global impact across key regions and emerging consumer protection challenges such as scams, as well as the cross-cutting policy responses arising. Head down to the show notes to register and secure your spot to our virtual event. Now, on to the episode.
Hi, I'm Caitlin Barnett, the Director of Regulation and Compliance at Chainalysis, and I'm really excited to be joined by Bill Plumeri, who is the Head of Compliance at Agora. Bill, thanks so much for joining us today.
Thanks, Caitlin. I'm excited to be here, and thanks for having me.
Anytime. You are one of my favorite guests that I've had the pleasure of interviewing so far, probably because we go back so far. Bill, you have had a number of different compliance roles within organizations from large financial institutions like BNP Paribas and JP Morgan. You may have worked with me at JP Morgan and then at Gemini in 2017. Can you discuss any changes that you've seen from the way the crypto industry approaches compliance in 2025 versus when you first started in Gemini in 2017?
Absolutely. And thanks again, Caitlin, for having me here. So compliance has always been a cornerstone for trusted digital asset companies. When we look at the industry today versus in 2017, I think we can see a few things that are very different, namely the technology, tools, and resources. And with those three, the industry as a whole has become much more efficient and advanced at implementing the compliance programs due to the new technology, tools, and resources. If we think about 2017, digital assets were still very new, and we're all working on identifying the best way to apply this risk-based approach. And with time came experience and these new tools and technology, because we were able to provide feedback to our partners, the vendors like Chainalysis, and say, hey, these are our pain points. These are the items that we're really trying to nail down. And you guys did a fantastic job in identifying and building out and enhancing that tech. Very noticeable change, I think, from back then to now is just the automation of compliance, particularly as it relates through to blockchain forensics. Tracing through digital assets was a very manual at that point. Now you can press a button and it will show you all the wallets the digital assets have flowed through. It sounds simple, but it saves a lot of time because you no longer do you have to sift through all that data. And with this new innovation, we can be much more efficient. On the resources part, what I mean by that is back in 2017, Caitlin, as I'm sure you can remember, it was very difficult to obtain the best-in-class third-party auditors or consultants or even bank accounts. But now we can. And so this provides the industry with a much higher grade of resources and just makes us all much more efficient.
Yeah, those are all really great points. And it seems like you keep finding yourself working at top crypto companies at the start of every bull run. So Gemini in 2017, in 2021, you were at BlockFi, and now in 2025, you're at Agora Finance. What have been the biggest financial crime concerns you've seen in each of these positive markets?
A few things come to mind. So I think on a high level, it's those scam projects, those ICOs back in 2017 to meme coins to NFTs may result in rug pulls or other sorts of scams. When the market's on a bull run, a lot of people including myself, are very excited and eager to get into the market it. But it's important to not rush into things and to make sure you know what you're getting into, because there are bad actors who are going to try to exploit that positive sentiment. So I think as an industry as a whole, those are some recurring topics. And then on a more refined level, it's that sense of urgency. And Caitlin, as a former CCO, you would know that in the compliance world, the sense of urgency can sometimes be a red flag, right? So when the market's on a bull run, that sense of urgency can be very legitimate. So it becomes slightly more difficult to identify what is a false sense of urgency to what is a real sense of urgency. And sometimes you just have to take a step back and ask the simple question. It's Friday night at 10 p.m. local time. Just, where have you been all day, right? Why is it urgent right now? And sometimes there can be a very valid reason for it. But if there isn't one, then, that's where you start identifying what's a valid sense of urgency and what's not.
That's a really good point. And you're giving me flashbacks to the ICO craze. Those were some wild times when we were dealing with every different ICO under the sun. So one of the biggest themes we've seen in the industry is this concept of know your ecosystem. MICA regulation has made this a requirement in regards to conducting counterparty due diligence when interacting with another VAS. What are your thoughts on compliance programs needing to make a concerted effort to conduct ecosystem monitoring? I know you're going to have some major thoughts on this considering the evolution of ecosystem monitoring.
It's not a very new concept for me, right? When we worked at Gemini together, we were working on launching the Gemini dollar, and so we had to implement a form of KYE. It also reminds me a bit when I was working in banking, conducting correspondent banking investigations, looking into those counterparties. Back in 2017, again, that was a very, very manual process where we would have to look through all the transactions. And now with the new tools, it's much more efficient. But what I think would be helpful, really, is to have a much clearer understanding of where the buck stops and to know exactly what our responsibilities are. What I mean by that is, of course, using a risk-based approach. At what point does the monitoring stop? Because when it comes to ecosystem monitoring, it gets to the point where we're looking at off-platform transactions, non-clients, sometimes unrelated, not even our counterparty to some extent. What tends to maybe happening is we may even be monitoring transactions at other organizations who are conducting reviews on those transactions that have more information than we do. So it would be helpful to know what our responsibilities are. Once we're able to do that and understand what's most useful for the financial crime watchdogs, who of course are our partners too, we can really fine-tune our crosshairs, use the resources at hand to be the most helpful partner we can to our authorities.
I think it's a really good point. Especially with technologies like Agora, you guys do have the ability to freeze and seize funds potentially. And with great power comes great responsibility. And to your point, you want to make sure that whatever you are doing is in the best interest of working together with law enforcement and the financial crime watchdogs for sure. So maybe getting into that a little bit, you're now at Agora, which is an emerging infrastructure that is powering the evolution into digital finance and payments. Can you just explain a little bit about what Agora does?
Yeah, absolutely. So what we're doing is we're building into the application layers. We offer a one-stop shop for companies who want to use stablecoins. And we're offering our stablecoin, which is AUSD, and also the infrastructure surrounding the digital payments.
And you have some pretty impressive numbers already with over 7 billion in total transaction volume, about 100 businesses and 25,000 users of your stablecoin. Can you provide some of the most common use cases where businesses will engage with Agora and your platform?
Absolutely. So a lot of it is minting AUSD to include in treasury management, but also the use in payments, FX, and DeFi. What we expect is that as more global financial systems come on chain, it will drive the AUSD adoption.
That makes sense. So Bitcoin and cryptocurrencies are well over 15 years old. Why do you think we haven't solved this payments and infrastructure problem? And is Agora attacking this archaic system from a particular angle to help more businesses and customers get access to digital finance?
So yeah, Bitcoin and crypto have been around for 15 years, but USD-backed stablecoins are relatively new. There have been many iterations of stablecoins over the last decade or so. We're seeing some of the first issued in 2014, but I think, in my opinion, the real emergence of transparent USD-backed stablecoins came about in around 2018. And it takes time for the financial community to adopt the new technology. And our angle is the institutional grade. State Street's our cash custodian and fund administrator, but it's also our team. Our team deeply understands payments, the startup infrastructure, financial services, and we believe that at the end of the day, stablecoins are a financial services business.
So before we get into AUSD, which is Agora stablecoin backed by USD, US Treasury bills, and other USD cash equivalents, what are your thoughts on the evolution of stablecoins and stablecoin use cases from when they were first launched to where they are today in 2025?
It's an interesting question, Caitlin, because we had the opportunity to see stablecoins grow with the industry and in adoption. I think we've seen a lot of different types of stablecoins over the years, from algorithmic stablecoins, if you consider that to be a stablecoin, to fiat and commodity-backed stablecoins, all with their different and unique use cases. But with fiat-backed stablecoins, like AUSD, we provide companies with a great tool, and they now have instant access to the US dollar outside of normal banking hours. They can settle trades or just simply have the comfort in knowing that they no longer have to wait for the banks to open to send US dollars. It's also the speed at which they're able to send USD and receive confirmation. Now, from what I remember, that was the major use case of USD-backed stablecoins when they first launched. But now the world has found a new use case for them, and it can really empower the individuals by providing them access to the US dollar, particularly in those locations where the local currency may be unreliable.
Yeah, I mean, it is funny. Did you think back in 2017 when we were launching the Gemini dollar that now in 2025 you'd be part of a company that is just focused on stable coins and offerings like this rather than, where we were at Gemini?
Yeah, I mean, exactly, right? It was a product at the time, and now it's an actual company, right? It's a business. Uh,
Yeah.
and so it's really cool to see that evolution from then to now.
So, a few weeks after you launched on Ethereum, you and the team launched your digital dollar on the Avalanche blockchain. What was the benefit of partnering with Avalanche and other blockchains?
Yeah, I think it's simple, right? It's high throughput, low cost chains. And we think that's the future of blockchain, and we want to meet our users where they'll be.
We have had several podcasts with some of the most important companies in the stablecoin ecosystem, including Tether, Circle, BVNK, and SpherePay. I think the resounding use cases in developing countries, like you just mentioned, where getting access to USD has always been just a huge bottleneck. So as more of these companies get access to stablecoin options, are you worried that there's a negative side effect, like the devaluation of their national currency, like what we saw in Nigeria as an example?
Well, I think you can add Agora into that bucket there, because I think that we are also one of the most
Well,
important
now you are.
businesses.
Now you're on the podcast.
Yeah, right. But look, there's a reason why countries want access to USD. And in cases mentioned, the bigger concern, I think, are the hardworking people that don't have access to the US dollar. And as more companies and countries gain access to fiat-backed stablecoins, as will their people, which will help them gain access to USD, which they're eager to do so.
Based on the strict reserve requirements being set out by MICA and potentially other jurisdictions outside of the EU, how do you plan to adapt to several different regulations to make sure that your stablecoin is able to be utilized in places like the EU?
It's through strong corporate governance and internal controls. Corporate governance is very important to all financial institutions, but especially to startups, because in the beginning, the company moves very, very fast. It's crucial to have a strong corporate governance, which acts as the backbone of the company and helps steer it in the right direction so that we can do things like, adapt to different regulations in multiple jurisdictions like MICA in the EU.
Yeah, I think sometimes it's lost on people how challenging it can be to have all these various regulations come out. And when you are a small startup, the manpower that's required to keep up with all these regulations is really challenging. So it's amazing, I think, what a lot of the startups are able to do. Switching topics a little bit, real world asset tokenization was the buzzword at most conferences before AI got hot. And it seems like everyone wants to put everything on chain. What are your thoughts on the current state of the real world asset industry?
I'm very passionate about tokenizing RWA, and I think that we're in the very early stages. So when we talk about RWA today, we may initially be thinking of treasuries, funds, and other financial instruments, but there's much more. When it comes to items such as artwork and collectibles and other non-fungible goods, where the provenance and authenticity of the item play such crucial roles, I think that the blockchain is a solution to that, and I think that non-fungible token technology will be leveraged to solve some of those issues. As you know, this is something I focused on in my previous role, where we obtained the first limited purpose trust charter of its kind to tokenize non-fungible physical items. I think that as the technology becomes more widely adopted and perfected, we'll see it making its way more into the commodities industry as well.
I think we had one of the greatest celebrations of all time the day you got that limited trust charter.
Yeah, we did.
So, with your vast knowledge of both traditional and crypto compliance programs, are there any assets that you're hoping we don't bring on chain? And if so, why do you not want them on chain?
Not off the top of my head, but I think it's important to remember that the blockchain is highly transparent and is permanent.
Yeah, maybe talk a little bit about some of the work that you did at Dibs and the types of assets that you were able to bring on chain, for lack of a better word of describing it. You'll do a much better job of me describing what actually happened.
What we were focused on doing was custodying the physical item and tokenizing it in a way that we would maintain custody of the physical item, and then the buyer, the manufacturer, would send us the items. We would provide them with the warehouse receipt, just in a digital form, so it would be in the form of an NFT. And then the manufacturer can go and sell those NFTs on their website like they would just their regular items. But then the buyer, the retail client, has the choice of either, hey, I want this physical item, where they would come to Dibs and we would ship the physical item to their home, or they can keep it in our custody, which would be, free custody, and then they can sell it again. And if they were to sell it again, then the item stays in our vault. They would be able to receive an instant trade. The manufacturer gets a piece of the revenue as well in the secondary market, which is a whole new market for them. And then the new individual has the choice of, hey, I want this physical item, or I want to keep it in custody. And it works well for auction houses as well. And so the items we were focused on were those non-fungible physical items, collectibles and art pieces and items where the authenticity and provenance of them came into a real play.
I think that use case was always so interesting, and it's not one that gets talked about so often. I think, to your point, we're talking about, in the tokenization world, more traditional financial products tokenizing. So I always think it's just interesting to give a different perspective of how this technology can be used. So what are some of the most interesting use cases you see being facilitated through your platform or through any of your customers when it comes to real world assets?
One interesting use case is this concept that we're developing of the 24/7 off-ramp. And we're developing that technology today for selected KYC clients. And what we really want to do is offer those services to all our clients that are using AUSD.
We touched briefly on AI being the hot topic. It's probably going to be the word of 2025, if I had to guess. Where are you using the technology in your workflow or on your platform? And what use cases do you see best suited for AI to intertwine with blockchain tech?
We use AI quite a bit throughout the day, but what I think would be a really cool use case for AI, especially for blockchain tech, is to provide a summary of that blockchain alert. Right? So today, when we have to look at the alert and synthesize the information from multiple sources into a narrative. But what would be really cool would be when we open up that alert, there is a summary there already from AI, which will provide us a summary of what we're looking at, and that'll help us move much more efficiently through the alert.
Work smarter, not harder. Should I tell some of our product managers at Chainalysis that we should implement some of this?
Yeah, I think so.
I'm shocked you haven't already told them. So switching gears a little bit, the U.S. seems to be making serious progress when it comes to stablecoin legislation, with two bills being pursued, including the Genius and Stable Act, as they aim to create a regulatory framework there. Do you think the U.S. will have meaningful legislation by the end of 2025? Get out your crystal ball, Bill, and tell me what's going to happen.
I really hope so, right? So I think there's a lot of promise on the legislation front, and it would be really great to see new legislation by the end of 25 to, help bring our country to the forefront of digital asset innovation.
I think you kind of already touched upon it, right? Like, what are the requirements of a stablecoin issuer? How far is too far in terms of monitoring? Where should you freeze? Where do your responsibilities start and where do they end?
Exactly that.
So we had a great interview with Leslie from Paxos to start the year, and she was floating an idea of a federal stablecoin regulator in the US. Do you think this is a viable option?
I do, right? We've seen divisions within regulatory bodies focused on digital assets like FinHub. So I think it's certainly a viable option to see a spin out and have just a federal stablecoin regulator.
Yeah, and I think, like, we've talked about this historically. One thing just I always like to note, we live and breathe this 24/7. And so I think it's important to acknowledge that regulators and legislators, to be quite honest, don't have that luxury. And so oftentimes I think they do get a bad rap for not moving as quickly as we would like them to, I guess. But at the same time, our technology is moving so quickly that there is this balancing act that if they did come out with regulation today, is it going to be obsolete tomorrow if something changes?
Right.
So curious for your perspective on that. Like, how do we balance the speed at which we're innovating and getting thoughtful regulation out there?
It's tough. I don't know the right answer to that, right? Because if you think about it, like, how do you write legislation today when the technology tomorrow will probably already be much more ahead of it. Let's just think about it for a moment. If they wrote legislation back in 2018, the stablecoin industry has already just blown past what the expectation was in 2018. So it's hard to do. I mean, in my opinion, maybe keep it somewhat specific to the industry, but try to keep it on a high level and keep that open line of communication with the industry so that we're able to provide feedback on those drafts like they typically do. Let us help them and let them help us establish that piece of regulation that's going to come out.
I wonder if they're going to use AI to write the legislation. So currently, most of your operation and customer base is offshore. With this recent momentum and commitment by the new administration to digital assets, what will be your path to the U.S. market? And what are some of the things you would still be concerned about from a regulatory perspective?
There's always been an element of regulatory uncertainty, and regulations can change over time, as what we've seen. So I think the changing regulatory environment will be a concern for me. But there's also other elements, like how capital intensive the regulation would be and that cost of maintaining the compliance program.
Yeah, that's a huge concern. So there are some talking points around the OCC regulating non-bank stablecoin issuers and the need for state regulators in certain instances and public disclosures of reserves. Do you think these additional layers of compliance will make the U.S. an innovator in this space or just make the cost of operating in the country extremely onerous and expensive?
It's hard to say for now, so I think we'll have to wait and see. But, as I noted before, some regulatory concerns that I have are that cost of maintaining regulatory capital and the compliance program itself.
Yeah, absolutely. So what are your thoughts on other regulations like MICA in the EU, which have set out clear guidelines for stablecoin issues? What are the advantages and then what are the challenges for those regulations and your business specifically?
The transparency of the regulation is certainly an advantage, right? I think we all know that because it allows us to follow the letter of the law as opposed to the spirit of the law, which we've been doing for a while. So having that black and white letter down on paper really helps us understand what our responsibilities are and all of that good stuff. But I think that some of the challenges, particularly with MICA and for us, would be the way it's applied through the various jurisdictions in the EU and adjusting to the respective country's local jurisdictional law.
Yeah, so almost similar to like the United States, how we have the federal regime, but then on a state-by-state basis, you oftentimes have to pivot really quickly.
That's right.
I want to go a little off script from what we discussed talking about, but I don't think you'll mind this question. Can you talk a little bit about the evolution of ecosystem monitoring, how you did it at Gemini versus how you're doing it today at Agora? And I think you know what I'm getting at by this question.
Yeah, right. Back in 2017, again, the technology and the tools, they weren't there, right? So it had to be done manually. And it required us to receive essentially just the data dump of transactions, risk rated by certain factors. We would then have to manually go through each one and look at the most high-risk transactions and manually enter that information back into the blockchain analytic tools and search, right? And conduct those reviews and those investigations. That took a lot of time, right? So that was one of my main roles, was doing just that, creating these rules within the data that we receive to come up with ways to be much more efficient and look at the activity that we were trying to identify. Now it's automated, right? So now it's automated. So again, the benefit is that we're able to move much more efficiently, and what may have taken me maybe 2 to 3 weeks to actually complete, you can do now in a couple of days, if that long, depending on volume and all of that. Using the tools that we have today, and that was some of the feedback that the industry provided to folks like Chainalysis and other blockchain analytic tools out there. We say, hey, this is something that we're working on. This is something that we're trying to identify. Here are our pain points. And then, there's the automated tool that comes out and goodbye, Bill, right? You don't need that extra guy. You still need somebody to do it and to look at those results.
We always need Bill. Always.
Thanks. That took a lot of time, a lot of resources, a lot of energy, which is now much more automated. And, you can be much more efficient using the tools and also identify what's most useful to the firm, but also to the authorities.
Yeah, and I think one other point that just because this specific topic is so near and dear to my heart because I was on the private sector side of the house with you, like dealing with the manual process and then moving over to Chainalysis and seeing it actually productized has been probably my favorite experience of being at Chainalysis. The timing, right? You would have to wait wait for a monthly poll from
That's right.
Chainalysis, whereas now you're getting it real time. So the crime fighting capabilities have dramatically changed too since 2017.
That's right. It's an excellent point. These were monthly reviews that we were doing. I mean, so, it wasn't live by any means, but it was the best we can do, right? It was the best the technology at the time had to offer. So we would wait for a month to get the data poll, and then we'd get the data poll, and then it would take us 2 to 3 weeks to sift through it because we have to action it within 30 days. And so that was also another stress point, right? You never know what's in that file, and you're spending time looking at X percentage when there might be something that you have to really file on later down in the report. And so that's right. What would take 30 days to generate that report and X amount of weeks to get through, we get it live and we're able to manage it much better.
And now being able to only see the stuff that you care about too. Like you're not seeing every, transaction because you don't care about every transaction, right? You only want to see the bad ones so that you can action them quickly, to take the appropriate action, work with law enforcement, file the required reports in whatever jurisdiction you're operating in.
Yeah, that's right. And that's exactly right. It filters out the noise, so to speak, and helps us, again, identify and be a better partner to the authorities and implement a much more efficient and advanced compliance program.
Yeah, for sure. Okay, so let's switch gears a little bit. What can you share with us in terms of what's next on your roadmap and what announcements, partnerships that you're excited about as we continue on in 2025?
Yeah, there's a variety of new products that we're bringing to market, and we'll keep that a little close to the chest at the moment. From my perspective as a compliance officer, my partnerships are with the regulators, and I'm looking forward to the new digital asset regulation in the USA, but also exciting partnerships with new regulatory agencies abroad as we continue through 25.
Super exciting. So this last question just makes me laugh personally because I know how much you love social media. What is the best method for our listeners to see what you're working on and connect with you on social media?
Right. So I do have a LinkedIn, and to follow Agora, it's Twitter @WithYouAUSD.
So proud that you're on LinkedIn these days, Bill.
It took a while.
It did, but we got you there. Maybe we'll break you down on some other social media platforms one of these days.
Not too much too soon.
Well, Bill, it is always an absolute pleasure chatting with you, and I'm so grateful that you took the time to join us today.
Likewise, Caitlin, and thanks again for having me on.
It's great hearing former colleagues talk about the early days of blockchain forensics and investigations. We certainly have come a long way. Last week, we shared that Chainalysis played a critical role in Operation Bonanza, an investigation led by the Spanish National Police. The action disrupted an international crypto Ponzi scheme that defrauded over 50,000 victims. Chainalysis provided advanced blockchain analytics and training, enabling authorities to trace, freeze, and recover $21 million in illicit crypto. A powerful example of how public-private partnerships can turn insight into recoverable value. To date, Chainalysis has helped global partners seize and freeze over $12.6 billion with a B worth of cryptocurrency. If you like this episode, you will love our upcoming Live from Link series, featuring Executive Director of the President's Council of Advisors on Digital Assets, Bo Hines, Jazz Takar from Ripple, and many more. Share this episode with a friend and subscribe.